Hi, this is Jinrong, Market Strategies for IG Singapore. The aftermath of the FOMC meeting has seen a flood of risk-on sentiment this week as markets are comforted that rate cut views have been somewhat validated by US policymakers. The Fed's dot plot showed that US policymakers have withdrawn earlier views for additional tightening and are leaning towards 3 rate cuts in 2024. The Dow Jones Industrial Average have managed to find its way to new record high, with much anticipation for the S&P 500 and Nasdaq to follow suit as well. On the other hand, the US dollar has touched its lowest level since August this year, supporting some recovery in gold and silver prices. Brent crude prices have managed to regain some footing as well, although more conviction is likely needed for a more sustained reversal to the upside. Heading into a new week, here are 3 things on our radar. First up, we have the RBA meeting minutes out on Tuesday. At its November meeting, the RBA kept its cash rate on hold at 4.35%, supported by cooler than expected economic data. That said, the RBA also kept the door open for additional tightening if needed, and the meeting minutes will be closely scrutinized around the factors that will prompt the RBA to act on its tightening bias in 2024, or any clues that the RBA tightening cycle has reached an end. Next up, we have Bank of Japan meeting outcome on Tuesday as well. Similar to previous meeting, key focus will revolve around any tweaks in policy wordings from the central bank or any adjustment in its yield curve control policy as the Bank of Japan continues to take intermittent steps towards policy normalization. Thus far, communications of a policy pivot timeline from BOJ officials have been very muddled, which leaves sentiments highly sensitive to any verbal cues from policymakers. At the upcoming meeting, markets will be watching for views as to whether its wage growth condition for the policy pivot has been met. For now, broad market expectations are priced for Japan to scrape its negative rates only in the second quarter of 2024. Lastly, we have the US Core PCE Price Index data out on Friday. The latest Fed's dot plot showed that policymakers have withdrawn their earlier views for additional tightening and are leaning towards 3 rate cuts in 2024. However, the interest rate market is still looking for 6 rate cuts in 2024, with the first one priced as early as March. With that, the Fed's preferred measure of inflation, which is the core PCE, will be on watch to provide validation to such dovish pricing, alongside room for an earlier rate cut. Consensus is for the core PCE to ease to 3.4% from previous 3.5%, touching the lowest rate since April 2021. Headline PCE is expected to moderate to 2.8% from previous 3%. That's all for now, and I will see you next week.